I just went back and compared the best years of gold from the last 100 years. And this morning, gold was ranked 7th. Guess what year was behind? 1934. 1934 is significant because that was the year after we devalued our FDR devalued versus the gold and confiscated a lot of gold. So we're in a very scary area for gold. So this is pretty good resistance, 3,500, pretty good a level to watch for. It could easily drop down to 3,000, but overall, it's a signal that I'm getting from gold is this is the deflation from the inflation we got from the biggest money pump in history to that peak in 2022 in the stock market and things. Now it's all starting to trickle down. So I'm worried that gold is going to might back up a little bit, but it's giving us signals of a great reset, the things that some of us wrote about a couple of years ago.
So, again, I think I asked this question a lot, Mike, and I'm trying to get a handle on how people think about valuation of a commodity like gold. Do you just, if you're a gold bug, you buy it? If you're concerned about the world, you buy it? If you want to take some more risk, maybe you sell it and buy some other stuff? Is that how you think about it?
Yeah. Well, the gold bugs, I think, are more the kind they buy it and hide it. Maybe in their underwear drawer. I mean, they have to be able to touch it and hold it and put it someplace. But the thing I think that's the most significant thing for gold is its ratio and its correlation and connection with the U.S. stock market. So one thing I've watched forever is the ounces of gold that are represented by the S&P 500. So right now, before we broke down, it basically took 2 ounces of gold for one S&P 500. Historically, that was really high. And now it's breaking down to about 1.5. And historically, it's closer to 1. So I think we're heading towards that 1-to-1 level, particularly with Bloomberg Intelligence expecting the S&P 500 to get to near 4,000 in the case of recession. So it might be a good meeting place. S&P 500 gets to 4,000, gold gets to $4,000 an ounce, and they meet back at 1. Historically, that's the place. So that's the number one. But bottom line, the key thing is it's really hard to value something. Like I said, a key thing I want to point out about gold that really changed this year. Before we had central banks buying, in the last 4 years, ETFs were net outflows on gold. But this year, we have significant inflows in gold ETFs, up almost 10%. And I think that's a shift in investor sentiment. And it's realizing, okay, there's issue with bonds. We all know the stock market's probably peaked. We're heading towards recession. Buy some of this rock instead of stocks. And so far, that's the case. But it's just getting a little stretched here at today's high, around 3,500 an ounce.
How long has he wanted to say?
I know.
By rock versus stock. I think a pretty long time. Hey, Mike, we talk a lot about oil. We talk about gold with you. What's the thing in the commodity market that's most on your mind right now?
Well, definitely gold. The key thing I've been watching, and I've really been somewhat flummoxed by, is copper. Copper's already had a good year. It started around 4. It pumped up to $5.37 a pound. That's a new high for the year on the back of tariffs. It dropped back to 4, and now we're around $4.80. I think on a global basis, certainly as you see as downward revisions of global GDP and what's happening with China and the rest of the world facing tariffs, I think copper's more at risk of going back towards 3 than staying above 5. It really hasn't done yet, so it's staying pretty resilient. But I don't know if we want to put it in the same category, but technically Bitcoin's classified as a commodity by the CFTC, and that's the one that's really been showing somewhat divergent strength lately.
Yeah, the kids don't talk about Bitcoin as much as they used to.
Oh, they do. No, they totally do.
Okay.
I mean, you just listen to Katie, Tim.
Okay.
They totally talk about
Still
it.
talking about it. All right.
Is it moving as a safe haven, Mike?
Well, it has been, shockingly, because in my view, it's people claim it's a safe haven, but it trades at much higher volatility than the stock market and gold. But I think what's really kicked in lately is this distress in the U.S. bond market. People are saying, okay, if we're having a problem with issues with the world's safest securities, mostly long bonds, maybe let's go to Bitcoin. The problem I see with Bitcoin is it looked like it put in pretty good peak last year at $100,000, and we're seeing outflows now the last 3 months, some inflows recently. And I think the key things people are realizing is that whole crypto space is a much higher correlation to the stock market than risk-off assets. In short term, right now at 90,000, I see it's more of a bit of a feint, and I think the risks are if stocks start rolling over, that the whole crypto space does the same, and Bitcoin is in that area of risk on now.